Sir, should we start?
Yeah, you can start. So it is Suraksha, Kajal, and Bharti. So you're doing mutual fund analysis, eh? ठीक है. Start.
A very good afternoon, everyone. Today, we Group 1 are here to present on mutual fund analysis. Our group members are Suraksha, Kajal, and me, Ritu Rana. Coming on to the next slide. So I'll be introducing about the mutual funds in the first. Mutual funds is a managed fund that pools money from shareholders to invest in securities. They give small or individual investors access to diversified and professionally managed portfolios. Mutual funds are divided into several kinds of categories representing the kinds of securities they invest in, their investment objectives, and the type of returns they seek. Coming on to the next slide. So these are the categories of mutual funds decided by the SEBI. So the first one is equity mutual fund schemes. It has large cap, mid cap, small cap, flexi cap, multi cap like these. Second one is debt mutual fund schemes. It has low duration, liquid, short duration, income, ultra short duration, and etc. The third one is hybrid mutual fund schemes. These are the ones which has aggressive hybrid, conservative hybrid, arbitrage funds, and those kinds of funds are there. The fourth one is solution oriented mutual fund schemes. It has children funds, retirement funds, investment or insurance funds. The last one is other mutual fund schemes. These as funds of funds and index funds, ETFs, we call them. Coming on to the next slide. So these are the ways to analyze the funds. When we talk about the return side, this represents the profit or gain earned on your investment in a mutual fund over a specific period of time. It it is usually expressed as a percentage of your initial investment. When we talk about the risk side, this refers to the uncertainty associated with the future outcome of the mutual fund, essentially measures the possibility of experiencing a loss on your investment. Now, Suraksha will continue.
So, am I audible?
Yeah.
Okay, so to elaborate further on the risk and return, there are two aspects to analyze the funds, as Ritu mentioned, risk and return. For return, we consider AUM, which is the asset under management, and CRISIL rank, which I forgot to mention here. But these two items are majorly part where the investor can play around the trust part, then how much an investor can trust a fund. Other than that, the investors also sees that how much return it is giving in on the different period of time. For example, 1 week, 1 month, 3 months, yield to date, 3 years, 5 years, 10 years, etc. Now let's talk a little bit about risk. We are all aware of the two risk measures, which is standard deviation and beta, which talks about the volatility of a stock or a share. It's the same case with the mutual funds, but here we consider three ratios, which are Sharpe ratio, Jensen's alpha, and Trenner's ratio, which more elaborates on the risk and return. So we all know that risk is often associated with the returns. So Sharpe ratio is basically adjusted return upon standard deviation. So we considered that the higher the Sharpe ratio, it's the better, as it justifies the volatility of the fund or the share. And the Trenner's ratio, it's a little bit similar to Sharpe ratio, but we consider beta in the denominator in that to allocate analyze that which risk we cannot diversify away. And the Jensen's alpha is a measure which compares our fund with the market. So it compares our returns with the benchmarks. So moving on, we have considered equity funds, where and 5 categories in that: large cap, mid cap, large and mid, small, and contra. And we'll be discussing the top three funds in these categories. So talking about the large cap funds, it's the pool of the largest 100 stock listed in the Indian markets according to the market capitalization. Mostly people invest in these kind of funds if they are low risk investors, and they are a long term investors, and they want stable returns. They don't want to take a lot of risk. So after an analysis, we found out three top funds, which are Nippon, ICICI, and HDFC. I'll just share our Excel as well. Okay, so in this we can see that according to the return part, Nippon has performed the best amongst the all these shares. After comparing our returns, we have analyzed that Nippon has a 10-year return of 19%, and we have discussed this in the class as well. Other than that, it has a Jensen ratio of 6.30. So we can say that according to the market, it's performing very well, and it has very low risk as well. So the kind of people investing in the large cap mutual funds are interested in a low risk with a high return.
Okay,
So
okay. Suraksha, you said go back to Jensen Alpha. It's coming
yes,
6.3.
30.
So just explain me what does 6.3 means?
It means that how much it is working above the benchmark. So benchmarks is that like Nifty and Sensex, we have a pool of best performing shares, and we compare those shares with those performance of those all shares with our share. So our share is performing 6 times better than than the benchmark. So this is a level of trust a investor can have in a fund. And risk is also how is it reacting to the market
So,
as well. So
okay, okay, fine. Now tell me, Jensen Alpha is calculated, this here it has been calculated how many years? I mean, it is compared to
uh,
the return of the, the Nifty or Sensex with how many years?
so I think so I read on the website is for these ratios are for 3 years.
3 years. So that means, just to give you
Hmm.
an idea, because to just to clarify to you, if suppose
Yes.
Nifty has given, say, 15% return in the last 3 years, and if
Mm-hmm.
suppose Nifty is the benchmark for this, of course, the benchmark is
Mm-hmm.
BSE 100. That means an index
Mm-hmm.
of 100 shares. So we are taking BSE 100 as the Sensex as the benchmark. Suppose
Mm-hmm.
BSE 100 has given, say 15%. Okay, so
Mm-hmm.
that means this fund has given 21% return. That means 15 plus 6.3.
Plus
Okay,
point.
so it has beaten the BSE index by 6.3 percentage. Okay,
So it is adding rather than multiplying.
it is not multiplying. It is,
Okay.
how much
Okay.
return. Like suppose overall market has given you 15% return, but this has given you, over the return of 15%, it has given another 6% more. Okay. So instead
Okay.
of, investing in BSE 100 stocks, so you invest here, you are getting 6.3% more than the benchmark. Okay.
Yes. So, that's bit more clarified for me
Sure,
now.
sure. Go ahead.
If a Jensen's alpha from the Jensen's alpha, we can get that we are getting 6.30 plus returns compared to the market, and the risk is also lesser in the Nippon India large cap fund. So, investors might. Invest in these top three funds, Nippon, ICICI Prudential, and HDFC.
Okay.
Um, we have also given it in a chart that we can see that Nippon is above the other two. And if we talk
इसको
about
slide show कर दो, slide show कर दो.
huh?
Keep it on slideshow. It is in a
Yeah.
slideshow. अब
Okay,
चार्ट दिखाओ एक बार.
just a second, sir.
हाँ ठीक है. Go for slideshow. Yeah.
Hmm.
So you are saying that the blue one, the lighter blue one is
Right, the
Nippon.
blue one is
So
Nippon, and it
yeah.
is above the other two. So it is the better option than the rest of the list after our analysis to
Okay.
invest in.
Okay. Go ahead.
Also, if we can see, if we see about the risks, the risk of the all three ratios are greater in the case of Nippon, and whereas we can, if we consider all the other shares, these three mutual funds are performing the best. But in these as well, we can see that Nippon is a little bit on a higher edge.
Okay, okay, just hold on, come back, come back. Now tell me,
Yes.
what do you mean by Sharpe ratio?
So Sharpe ratio is the formula says that it is return minus risk-free rate upon the standard deviation. So basically, our we are seeing that how much risk we are taking on each, how much return we are getting on each risk part. So we
Okay,
are
just hold
dividing
on,
it
just hold
by
on.
standard
I
deviation.
understand what you're saying. Just listen from my side. Okay, just
Yes.
to have you should be absolutely clear in your mind.
Yes, sir.
Suppose you have money.
Huh.
Okay, so
Okay.
if you have money and you don't want to take any risk, okay,
Hmm.
so you would be putting your money in government bond, which gives you about say 7% return. Okay,
Yes.
now if you're
Yes.
putting money in a large cap fund, how much
Hmm.
return it is giving over than
Over
the
that.
risk-free rate? So that means
Yes.
if a person is taking a risk,
Hmm.
because the
Hmm.
say standard deviation of a fixed income security say zero, that means it doesn't move here and there so much. The volatility is very low in case of
Well,
fixed income. So that means
correct.
all the risk is coming because you are investing in equity market. Okay,
Yes.
so how much return you are getting over and above the risk-free rate? Because
Yes.
which means that by taking risk, you are earning how much extra return. Okay,
Yes.
then you divide that with the
The
standard
standard
deviation,
deviation.
which is the risk. So
Hmm.
this is adjusted return per unit of risk you're taking. Okay.
Yes.
So where you get the highest, that would be having a highest Sharpe
Higher.
ratio. Okay.
Yes.
कितना आपको रिटर्न मिल रहा है over and above the risk free rate? Your
Hmm.
choice. If you tell someone to invest money, he says I can't take risk, I want to invest in a fixed deposit, so you may get 7%. Okay, so if he
Hmm.
puts his money into equity funds, he will be getting a higher return, but it will come with a risk. Okay,
Yes.
so we are taking that extra return he's getting and dividing by the risk and
The
telling him
risk.
that he is getting so much of return per unit of risk. So
Hmm.
any fund which is getting the highest will qualify for our investment grade. Okay,
Yes.
like you're saying, Nippon is giving you the highest return per
Highest.
unit of risk. Okay,
Yes, sir.
fine. Okay, go
Uh,
ahead, please.
And similarly, if we can talk about trainers ratio as well. So trainers ratio just a bit different than the Sharpe ratio, that it measures, considers beta in the denominator, considering the risk which we cannot diversify. So basically the concept I got was that Sharpe ratio is something we can say that it has the diversified risk in that denominator, which is a choice of the investors. It could have been diversified and the risk could have been eliminated, but trainer's ratio is a bit more detailed, that the risk which cannot be diversified, and that is the kind of a real risk. So we consider the trainer's ratio as well, and in our case, Nippon is performing good in that as well.
Okay.
So considering all three ratios and the returns, risk and the returns, Nippon has performed the best in the
ठीक है,
large
कोई
cap
बात नहीं, चलो
funds.
आपको जरा ये ट्रेनर रेशियो के बारे में नेक्स्ट टाइम में बताएंगे अच्छी तरह, सो दैट यू रिमेंबर दैट. ओके, लेट्स go ahead,
Okay.
some more clarity on the trainer ratio, what you said. Fine, anyway. Okay,
Okay, so
go ahead.
mid cap fund, our second category is mid cap funds. So these funds had a pool of stocks which are ranked between 100 to 250 by the size of which is market capitalization. So in this, the investors are looking for a return in 7 to 10 years, a long term investment as well, but they are willing to take a little bit of risk to earn the higher return. So after an analysis, we got down to three mutual funds, which are SBI mid cap, HDFC mid cap, Quant mid cap, and Motilal Oswal. So a little bit on our Excel to understand it better. So between these three also, Motilal has performed the best. We have considered these three because we want the risk in the 10-year period. We want the return in the 10-year period the highest. So Motilal is performing the best in the 10-year period. But if we consider the other aspects as well, quant mid cap is also performing very well, and it is a little bit inconsistent, but it is performing very well in terms of till the 5-year data. It has dropped in the 10th year, and HDFC mid cap fund is also performing good. If we talk about the risk in this. Yeah, if we talk about the risk as well, so we can see that, I'm just doing this, yeah. We can see that Motilal has Jensen's alpha is 7.35, as we have already discussed that it will give 7.35 additional return to the investor, and it has the higher Sharp and the trainer ratio as well. So it is a good fund to invest in as a point of view of an investor who wants to invest in a mid-cap mutual fund.
So basically, again, coming back to Suraksha, the Janssen Alpha tells you that how the fund manager, is taking the decision.
Yes,
So,
sir.
we call them alpha managers, who are creating a higher return than the market itself. So, some of the fund managers, they are very good, and, they know, how to get you a higher return compared to the other funds, as well as compared to the Nifty or a Sensex or a BSE 500. So it's called Jensen Alpha. So this
Yes,
represents the performance of the fund manager.
fund
Okay.
manager.
Yeah.
Okay, sir. So a little bit of a chart in this as well. We can see that although Quant was giving the higher performance in the short-term period, but still it dropped down in the 10th year, and Motilal Oswal is giving higher returns in the 10th year. So if an investor, both are good, but if an investor is thinking on a consistency level, then they should invest in Motilal, and if they want good returns till the 5-year span of time, then they can invest in Quant. And if we can, according to our analysis, there was a fourth option as well after HDFC, which was very close, which was Edelweiss Midcap, which is also close to HDFC Midcap only. These are the risk of I've already talked about it. These are the risk chart of mid-cap funds. Let's talk about our third category, which is large and mid cap. So these are the pool of largest 250 stocks. So it is the combination of mid and large cap funds, and mostly in this this is for the investors who are seeking for a long term gain, but they don't want to. They want to invest in a mid cap, but they don't want to take a lot of risk. So in this, we have to consider that the risk should be minimum and the return should be higher on that term. So after our analysis, we got down to 4 types of funds. We have done 4 in this because HDFC and ICICI Prudential were very close. There were a little bit of pros and cons in this, but these 2 were the safest options. Other than that, Quant Large Cap, Quant and Bandhan Core Equity Fund were also good options.
Okay.
So
ठीक है. काजल कब करेगी present?
after this one, last 2 she'll do.
Okay. So
So
good. I mean, Suraksha, what I see is that you have done a very good job. I mean, your presentation material is good. You have shown graphs and all the data to back your what you are saying. So it's a good job. Okay.
thank you, sir.
So it was a good learning for you, basically. I mean, this you did for the first time because you studied the mutual fund for the first time, isn't it?
First
Nobody.
time, yes, sir. Yes,
So-
so that's why we took this project, because this is something very new to us, and while presenting it, we'll, as you have mentioned and told us the new concepts, the concepts again, so it is a better learning for us.
So everything, even the IPO was very good. I mean, this is also very new and very practical thing, basically. Okay.
Yes,
Chalo,
sir.
theek hai. Go ahead, please.
So in the large and mid cap funds, let's talk a little bit about the 2 funds I was talking about, ICICI Prudential and HDFC. So if we can see, they have almost same return in the longer run, in the 5-year, but there are some pros and cons to it. The ICICI Prudential one has the higher 10-year return, but it has a lower risk then. We can see we can see it in this one. Yeah, so it has a lower risk in the it lower risk. But then we can see that the con is that their AUM and the crystal rate is a little bit lower than the HDFC. So if a investor is looking at the point of view of trust and all, then it should go with HDFC, because HDFC has a higher AUM and the crystal rating with with a slightly higher yield to date percentage return, and the ratios, it is a little bit riskier than the ICICI Prudential. So it is completely up to the investor what is the investor thinking, and then they should invest in these kind of funds. We can see the graphs as well in this, that the Genesis Alpha is higher for ICICI Prudential, and the all the ratios are higher in the ICICI Prudential, and HDFC is a little bit risky but giving the almost similar returns. So now Kajal will cover the further part.
So I will start with the small cap funds. So what are small cap funds? So basically small cap funds are the mutual funds, are the selected stocks for investment from the small cap category, which includes all stocks except the largest 250 stocks by market capitalization. Now what happens in small cap is that it also comes with some higher risk due to the volatility it brings in and the potential lack of liquidity associated with these stocks. Moving ahead, in the small cap funds, we have taken three of the companies. When we looked at the different returns which it gives, there was Nippon India Small Cap Fund, which gave 30% of the return in 10-year time period. There was Quant Small Cap Fund, which gave 21% 10-year return. And then there was Bandhan Small Cap Fund, which gave 33% 3-year return plus 73% 1-year return. Now, when I look into the Excel, so Suraksha should, okay, yeah. So I'll show, okay, I'll explain it in your Excel itself.
You can share your screen otherwise if it's better.
Okay, I'll show my screen.
Yeah.
Okay. Is it visible now?
No, not at all.
Okay, I'll show the entire screen. Is it visible now?
It is fine. Go ahead.
Okay. So what I was able to understand in this small cap return, when I look at the small cap return, was that in the 10-year time period, Nippon was giving 30% as the return, which was followed by, so if I show it right now, so in the 10-year time period, it was giving 30% return and it was followed by SBI and Axis. However, when I moved to 5-year time period, it was Quant, which was giving 39% as the return in the 5th year, 48% in the 3rd year, and 32% in the 2nd year as well. So based on this category, we have taken Nippon, Quant, and then Bandhan came into picture in the first year when I took in the return which it was giving 73% of the return, and it was also consistent in the return in the latest period. For the 6 months as well, it was giving the highest return, and
Very good.
therefore we took this
Wonderful,
three fund.
Kajal. You have done a great, analysis to see even a fund which has, started performing. I mean, very good. Particularly, 73% is a great return, and most of the funds have done very well, particularly small cap in the last 1 or 2 years. So the way you
Yes.
have, analyzed it, it's a good thing. Okay, go ahead, please.
Thank you, sir. So based on these three categories, we have scaled down that these three funds are the ones which we will be going ahead with. Now, if I coming back to the presentation, So based on this, we have drawn this graph. Based on this graph is shown, and it shows a similar picture which I discussed right now. Moving ahead, now again I'll take the Excel and explain using the Excel itself about the risk. So in the risk as well, is it visible?
Yeah, yeah, it's visible, but just see risk.
Okay,
Now
okay,
it is okay.
yeah, okay. So when I took the risks, first I started with the trainers ratio. In the trainers ratio, what I was able to see that Tata was the one which was at the highest. So Tata is there with 0.36 of percent as the return. Whereas in the Jensen Alpha, when it came to Jensen Alpha, Quant has the highest with 9.65. And at the same time, when we look at the Sharpe ratio, it is Nippon which has the highest. But then we also have to look at the beta, that is 1.05 for quant. Although it is giving higher return, higher percentage of return in the Jensen Alpha, but it is also a lot more riskier as compared to the Nippon and Tata. So therefore, we rank Tata as the first one, and then after Nippon, and then Quant
Okay, okay,
in the
great.
small
Kajal, again,
small
I think
cap.
you have done a great job of comparing the risk and Jensen Alpha. But of course, that is a great thing. I mean, what you have done, and you said like quant is riskier, but because
Mhm.
it is riskier and it's a very good time, the market is doing fine. Okay, a time will come when the market will start falling, and then it will fall much faster than the other two. So it has a great risk, but at the moment it is enjoying the return and it is giving you a high Jensen alpha. So fund manager is riding on the success of the bull market, which is we can see right now. So even the funds which are riskier, they would be doing much better. But in the tide, basically different this thing, and we find that the situation becomes not so good, and the market has already overvalued. Then these
Mm.
funds may not do so well in that time. Okay, so Kajal, what you have done is actually you're trying to say that only, and so you have covered it very well. Good.
Now moving ahead, after the small cap fund, we have the contra funds.
Okay, just
So what I've
spend
done,
that 2 minutes more. Okay, then we will go to the next presentation. Okay, just
yeah,
conclude
yeah,
it. Okay.
sure. Okay, sir. So based on the analysis which we did was that Nippon was the one which was enjoying the highest trainers ratio with 1.93. Sorry, not trainers, it's Sharpe ratio 1.93, followed by Tata, and then followed by Quant.
Okay.
And again, when it came to Jensen's alpha, it was quant which has the highest Jensen alpha, which we can say that it was earning more, like it was earning 9.65 times more than the benchmark which was set in the market.
It is
It was
not
followed by
9.3 times. It is actually 9% more than
alpha.
the
Yeah, yeah,
small cap
yeah.
ones.
The
तो वो
extra
दिखाओ
return which
आप
is giving.
कंट्रा फंड दिखाओ आप मुझे.
Okay, sir. So coming to the contra funds.
So put it on a slideshow more.
Yes, sir. So coming to the contra funds, these are the mutual funds which we invest in stocks and follow a strategy of purchasing and selling in contrast to the prevailing sentiments. So the underlying assumption is that the herd behavior among investors often makes the market very costly or very cheap at times. So
Okay.
in contra fund, what I was able to notice is that when I went to the website of Money Control, I was able to find that in contra funds, only three of the funds are available. So there were only three funds which were available in the contra funds, and
Absolutely,
I
because it's a very a narrow window, because there will be very few funds which will come under contra funds, because it can't be, because it can't be like large cap where we have 30 40 funds. So it has to be just very few of them, which
yes,
where the story has turned from bad to good. Okay, so it will not be there for everyone. So it's okay. There will be very less scheme there. Okay, go ahead, please.
so in the contra fund itself, what I was able to analyze in the contra fund return is that in the 10-year time period, when I look into the 10-year time period, it was Invesco which was performing the best. However, SBI Contra has been the most consistent fund over the 1 year, 2 year and 3 year time period, which I can show over here that when I look into it, so SBI is the one which is staying consistent over the period of time for the 1 year, 3 year time period. However, there is also a different pattern which was shown that Kotak was the one which was performing well in the recent years, in the monthly time period, in the 3 months time period, in the 6 months time period. So if I look into the 6 months time period, it was Kotak which was performing well. So these three categories were performing. So Invesco was doing well in the 10-year time period. SBI was consistent because it was performing well in the 2-year time period, 3-year time period, and the 5-year time period. And Kotak was the one which was rising in and is performing well in the first, 1 month, 3 month, and 6 month part time period when it comes to the return category. Now talking about, uh, sir, are you saying something?
No, no, I'm not saying anything, but just conclude in next 1 minute, okay?
Yeah, sure, sir. So, likewise, I talked about the contra fund risk. So coming to the contra fund risk, I would explain using the graph which is shown in our slide. So coming to the contra fund risk thing, the analysis which I was able to draw was that SBI contra has the highest Sharpe ratio. SBI contra fund has the highest Sharpe ratio with 1.78. And it is followed by while all the other funds, and SBI is the one which has the highest in all the other categories as well. So in the Sharpe ratio also it is performing the best, in the Jensen as well it is performing the best, in the trainer as well it is performing the best. And in the second comes Kotak, and in the third comes Invesco in this whole three. So with this we can sum up that SBI is the one which is standing strong in the contra fund area and is performing well. With this we conclude our presentation. Thank you.
Okay, Suraksha, a very good presentation from your side and great analysis.